Hello everybody and welcome back to FX Tweet. My name is Akash and today we're going to be taking a look at Bitcoin and discuss why it could drop as low as 10k. So let me just mark this 10k level right here and discuss. Right, so there's a couple of things happening in the chart. So let me just go one by one. Right, let's talk about the 200-day moving average and how the 200-week moving average and how it's been important for Bitcoin's history. But before we actually get into any of the details, please make sure to head over to our YouTube channel and hit the subscribe button. And if you want to stay updated to the hottest trends in the crypto market, make sure to also click on this bell icon. You can give us a follow on Twitter at FXSCrypto, and if you enjoyed the content that I put out, make sure to give me a follow as well at Mangeko with a 0 at the end. You can also join my Telegram group where I post setups that I am taking, right, and give you more in-depth analysis of what's actually happening in my mind when I take the trade. So let's get into Bitcoin and why a drop to 10k makes sense, right? So first we're going to talk about the 200 weekly moving average, right? Bitcoin price, historically speaking, right? Bitcoin price has bottomed after a drop or a deviation around the 200-day moving average, 200-week moving average, right? The first bottom, although it happened like the first cycle ended somewhere in the 6th June 2011 and dropped 93%. The 200 weekly moving average, the first time it came into existence and Bitcoin price bottomed was in the 2015 of Jan, where Bitcoin price deviated 12% from the moving average, and that marked the bottom. And shortly after that, Bitcoin price deviated again below the 200-week moving average, and this time it was a 30% deviation. Eventually, the 2018 bottom was formed around 2018, around the 200 weekly moving average. But then we had a massive COVID crash, which posted roughly 30% below the 200 week moving average. Now, what's happening is the price has sufficiently deviated below the 200 week moving average, and the difference between what's happening now and what happened before was that in each of these deviations below the 200 week moving average, the price recovered quickly above that and it marked the bottom. But what's happening now is that not only has Bitcoin on a weekly time frame closed below the 200 week moving average, but has produced 3 weekly candlesticks, 2 to be precise. This one is ongoing, has 6 more days to complete. So it has produced 2 weekly candlesticks below the 200 week moving average. Now that is historically never happened. It's the first time that's happened. And the reason why it's different is that in all of this Bitcoin's lifespan, right, it's never faced a recession, right? It was launched after the 2008-2009 crisis, the Great Recession, and since then the price has enjoyed this up only trend, right? So now Bitcoin is gonna face this since it's gonna undergo recession. I think this is gonna be a first of a kind the price action that we see for Bitcoin. Right, let's get back to 10k and why I feel like 10k seems plausible. Right, I've also marked out the bear market returns. Right, the first cycle, the Bitcoin dropped 93%, roughly 94%. In the second cycle, Bitcoin dropped 86%. In the third cycle, where I kind of came into the crypto space, Bitcoin dropped 84%. So the general observation here is that every cycle the retracement is reducing. It's becoming less, right? If you take an average of all of these, right, you get somewhere around 84% retracement, and so far we've only undergone 74% retracement, right? So if we were to get say 84% retracement, you are looking at roughly 10.5k, right, which is around the same around the 10,000 psychological level, right, give or take $1,000 basically. So if I were to draw a target box, it would be 11,000, and then this would be 9,000, right? This is where Bitcoin price could technically bottom. Now, and another outlook which kind of predicts 10k is plausible is the void. The void chart basically is a derivative of, like, basically the targets for it are pretty much the same, but the reasoning behind it differs. In this chart here, I've marked out this void here extending from 29.5k to 11, roughly 12k. And the reason is because when Bitcoin price rallied from roughly October 2020, it went from 12k up to at least 32k without any massive retracements. Now this is an inefficiency, and the volume traded in this particular span was almost neutral. It was basically an up only. So what's happening right now is basically a mean reversion of this rally that took place here. And if you use a fib tool to check this out, the price is now in a deep discount mode. As you can see here, it's well below the 79 retracement level here at 21.3k. So if this inefficiency has to be filled completely, then you are looking at another 38% retracement, and it's not far off from what we discussed using this chart here, where you're looking at 48%, so basically 10% more than what we were looking at. Yeah, so basically 10k Bitcoin shouldn't be out of the realm of possibilities. So yeah, that's pretty much it for today's take on Bitcoin. If you enjoyed this session, please make sure to like, comment, and subscribe.